Hey everyone, this is Monica and Shannon from AMERIND, and apologies for the last minute change with the link. Um, if you are streaming us live right now and you can hear us, if somebody could hop into the chat and let us know that you can hear us. I see that the microphone thing is working. We've had some fun things going on today in terms of technology. So I'm gonna try to put our presentation up real quick to see how that goes. We're just working through some technology issues, folks. You don't mind if your face doesn't show for the presentation, do you?
Not at all.
Okay.
Nobody wants to see my face.
That is not true. So, oh, wonderful. Lorita just said she can hear us, but she cannot use the chat. Great. I will send an email at the end of this presentation, and anyone who has any questions can send them to us. We promise we will get your questions answered. All right. So I think that's how that's going to work. Lorita is our cheering us on. Thank you so much. We really appreciate it. We've got 6 people. Let's see who else we got. We got somebody who is using the chat and they said they can hear us just fine. Wonderful. All right. So here's what we're going to do. I'm going to get out of the picture. Shannon you're not going to see her face, I don't believe, for the presentation, but she is going to share the PowerPoint and talk more, and I will let you introduce yourself, Shannon. How's that sound?
Sounds good.
All right, so here we go. We're going to share the entire screen. And it looks like a fun house. And now we're sharing. Take it away, Shannon.
Awesome. Good morning, good afternoon, everybody. My name is Shannon Lastiona. I'm the underwriting manager here at AMERIND, and I am from the Pueblo of Zuni, which is located here in New Mexico. My homelands are about 150 miles west of Albuquerque. So welcome. Thank you for spending time and taking time out of your day to hopefully learn something new, and hopefully the information we will be sharing will be applicable to your day-to-day. It's definitely as a high overview to help get you through some of the insurance concept, provide some information on key questions to ask as you're looking through your insurance policies, and whether you're a housing entity or a tribal enterprise, it's important to understand the coverage that you have in place and how well you are protected. So welcome to the webinar, Understanding Insurance for Tribal Housing and Enterprises. We like to hope that this information will be highlighted and educational for you. And as we know, insurance is very, very interesting as a whole, depending on how you're looking at it. So let's jump right in. The purpose of today's session is to provide clear, actionable guidance. And whether that's if you're looking over information, kind of helpful hints of what to look out for as part of your coverage, support informed insurance decisions, strengthen the protection for tribal communities, and then, of course, build confidence in understanding your coverage, liability, and key policy concepts. So overall purpose is to simplify insurance concepts and give you the tools that you need to make confident decisions when you're evaluating your coverage, whether you oversee housing, enterprises, or both. These fundamentals definitely apply in your daily responsibilities with regards to insurance. So why does insurance matters? Financial stability, right? Insurance just isn't paperwork. It's a financial safety net. When something goes wrong, the right coverage ensures that families stay housed, enterprises stay open, and the tribe maintains sustainability. So definitely, one key measure is financial stability, housing continuity, whether you're overseeing a housing entity or tribal housing on behalf of your tribe. Insurance protects people, property, and as housing continuity depends on adequate coverage and clear policy terms, making sure you're carrying the adequate coverage for to continue housing on behalf of your tribal members. And then, of course, community well-being. The tribal enterprises support jobs, revenue, essential services, and anytime those types of enterprises are affected, it affects the community as well, especially if we have jobs that get affected by a loss. So definitely as a whole, supports community well-being and then enterprise sustainability. If you have the right coverage in place, this reduces risks. It supports long-term stability for tribal enterprises, and it just ensures that in the event something bad occurs, you can definitely rely on your carrier to put you back whole and pretty much put you back to where you were before. So definitely a key piece of why insurance matters all around for our tribal communities and the tribal members that we serve as well. So how to secure the right coverage. Now that we understand why insurance is important, let's talk about how to secure the right coverage. And these are just some high level concepts that we look at, especially depending on where you are at in the country. So identifying risks. When we talk about risks, we think about what are we exposed to? Do we have a predominant of wildfires occurring in our area? Are we in Tornado Alley? Are we on the east coast of the country to where hurricanes can affect us? So by you identifying the locality of where you're at and being able to identify what could possibly happen to my community, what could possibly happen to my properties, those kind of help you evaluate what you're exposed to in your area. Here in New Mexico, we call it the land of enchantment. Luckily for us, we don't get a lot of high exposure types of severe convective storms, but it is very dry out here. So that can lead to heavy dry brush, which can also account towards wildfire exposure, which we have never really had a history of. But in today's age where vegetation is very dry, it can take just a match or a cigarette thrown out the window and our brush is on fire. So definitely some of those risks and exposures do increase as weather patterns change, and then just accounting for everything else that's going on. So identifying your risks, recognizing the threats that could cause financial damage or disruption to your communities, and what do you have to prepare for in the event something occurs. So definitely something to be mindful of. Matching your coverage to exposures, which is bullet number 2. So what we mean by this is making sure your insurance actually covers your real risks. As an example, if you own properties, do you have property coverage in place? And what values do you have those established at? So making sure your values are adequate enough to cover your properties that you have under your management. What do you own? Do you have buildings? Do you have land? Do you have revenue type of enterprises under your management? Making sure you have coverage in the event something occurs to those types of operations. And what do you do? Are you business? What kind of business activity do you have? Do you have gas stations, hotels? If you're a tribally housing designated entity, do you have your own construction crew, maintenance crew? Employees and staff. So making sure that you have coverages to protect your employees, not only your employees, but the properties, and then everything that you manage and maintain as part of your entity or your tribal government business. Bullet point number 3, understanding deductibles and limits. So thinking about your deductibles, this is pretty much your portion into a loss. Example, if you have a $5,000 deductible and you've sustained a claim of $100,000, that $5,000 deductible is your retention part of that loss. So utilizing insurance as an example, with that $100,000 loss, if you had a claim, covered claim, your deductible portion of that would be the $5,000. And then anything above that amount would be paid out by your insurance carrier. So understanding your deductibles, what kind of thresholds from a budgeting standpoint you're able to provide as part of that first layer of when a loss occurs. And then, of course, limits. Very, very important as far as the limits that you're carrying, not only on a property standpoint, but from a liability standpoint as well. And understanding if you have access to those full limits or if there's sub limits within those coverages. So definitely some things that I look out for as far as from the coverages that you have on your policy, and then review your policy annually. I know it's very easy to say, all right, I got insurance for the year, I'm good, I'm going to put this policy away, I don't have to look at it for another year. If you have increase in businesses or enterprises that you are adding to your operations as a tribe, if you've added staff or you've removed staff, all of those types, we call those types of exposures that should be updated on your insurance policy, especially if you've got businesses that you're adding or adding staff and employees to your enterprise. You want to make sure that you have coverage in place that's adequately providing enough coverage as you expand your enterprises. So, or your housing stock as well. You know, you've built a bunch of homes and you forgot to add them to your policy while you're technically shortchanging yourself because you don't have coverage for those homes you just built. So very, very important that as you are growing and expanding in your operations, to make sure you're just updating those on your policies, and that ensures that you do have coverage in the event something bad happens. So just some highlights on how to make sure that you're securing the right coverage, and some key questions in addition to this. So as you are placing coverage and as you're evaluating your coverage that you carry with AMERIND, you just want to make sure that your coverage aligns with your risks. We talked about operations, making sure you have enough coverage to cover what your entities are doing. And then, of course, I think the bigger piece of this is the financial exposure. So with that, as you are placing coverage, some key questions that I would ask any carrier is what's covered and what's excluded. Tell me what I'm covered for, and definitely tell me what I'm not covered for. So very important to know as you are evaluating policies, is your property insured at the correct values? One thing that definitely is we encourage is evaluating your covered values on properties, ensuring that it's adequate. And especially with today's inflation and rise of costs, it never hurts to just double check those values to make sure that if anything were to happen to that building, you have enough limit on your policy to make sure we can put back what you originally had. From a financial piece, some questions as well as what are my deductibles and sublimits? We touched on this in the previous screen. Can't emphasize how important it is to understand how your deductibles work. Is it just property? Is it just liability? And are there any sublimits that may limit my coverage on my policy? So from a financial standpoint, you always want to make sure if there's a sublimit, something happens and you're capped at a certain number, you want to be mindful of that, because if you have to put any outside pocket of your pocket expenses because you're capped on those limits, that's a financial impact. So making sure we understand what kind of limits are on your policies, and then what happens if we can't operate, even from a housing entity side of things. If you have a rental property and there's a fire that occurs and you can no longer collect rent from those tenants, that's a loss. That's a business interruption. That's a loss of the finances that are coming back to you. What do? Same thing on a tribal enterprise side. Let's say you have a gas station and the pump explodes or something, real life scenario, right? Now we can no longer have that gas station in operation. Guess what? You're out for a week. you just lost revenue for a week. Do you have protection for those types of business interruption scenarios? So definitely, if you're collecting rent or if you have income generating revenue types of enterprises, you want to make sure you have business interruption included on your policy in the event your business is inoperable or you aren't able to either adequately collect rent, or for some reason your housing office can't operate and you're out of business for a certain amount of time. Same kind of concept. From an operational standpiece, does your coverage align with your risks and activities? As an example, are you producing any products? Do you have a special force account crew that goes and does repairs on your properties? Are you responding to things outside of your norm? You want to make sure that you are capturing all of those exposures in the event an accident occurs. And lastly, I think is another important piece is claims. You definitely want to ask about the process. What is the claims process? What happens when I sustain a loss? Who can I contact? How long does it take? Is the process drawn out? Is it easy, clear, cut, and dry? Can I get in contact with a live claims person? I know me, if I were to call and I had something that happened to me on the personal side that was bad and I tried to call my insurance carrier and I just got a machine, I would be very frustrated. So if I can get in contact with a real life person, that adds value because I know I'm going to be able to get my answers question. I know somebody's going to respond when I need them to. So I think if anything, it's one thing to get your insurance coverage in place, but it's another thing to also look at is how does your policy respond? How does the claims department respond? And what type of resources can be provided from that as well? So not just purchasing the coverage, but in the event you do have coverage, how can we help? And in that aspect, what's the process like? So definitely some key questions that I would recommend asking as you're placing coverage. And with that piece of things, we are going to move on to liability. So did you know, and this is just a 30,000 foot basics overview of liability. If there are any contents or any subject matter on these next few slides that you feel you would like to know about more in detail, or maybe some one-on-one type of sessions to kind of help provide more information, reach out, let us know, let Monica know, hey, this information was presented. I'd like to know a little bit more in depth about it. Because this is just like a 30,000 overview. There's so much more that goes into liability. But for the sake of time and of course your time as well, we're just going to provide some, like I said, 30,000 foot overview of liability. So did you know there are different types of liability coverage? The most common one we see, of course, is general liability. And then we have other types of liability coverages that we offer, professional liability, employment practices liability, cyber, and auto. But to break it down, your general liability is pretty much protection against third-party type of bodily injury claims or third type of property damage claims. As an example, you have a housing operation, you've got your housing office, maybe the cleaning crew was mopping, and the cleaning crew is our staff, it's housing staff. And they were mopping and they accidentally left a puddle of water right by the mop bucket. Didn't notice, forgot to clean it up, didn't have any signs out. And we have a third party who is not employed by housing. They pretty much came in to ask questions on their home. They slip and fall, and they have now sustained a bodily injury type of accident in your operation. So third party damage, not associated with housing or the tribe, and they've sustained an accident on our site. From there, of course, we do a little bit of an investigative work to look into all the details, but that's just an example of a third-party person coming onto our premises where we failed to do something and it caused injury. Another example is for tribes that are lucky enough to have grass in their area. Unfortunately, New Mexico, we kind of have to plant our grass, and there's other tribes out there that they just grow naturally. So very, very lucky if you're one of those tribes. But back to the example, if you are, let's say you've got a cluster of homes and you're maintaining the yards, you're mowing the lawns for the homes that you manage, and you've got a tenant's vehicle parked, and we failed to let our tenants know, hey, we're going to be mowing our yards. You need to move your vehicles from this area in the event we've got debris flying out. So part A is we failed to inform our tenants of our homes. Part B, we go to start mowing the lawns, and then all of a sudden there's a big rock that flies out from under our lawnmower who's being operated by our employee of the tribe. That rock flies out, hits a tenant or occupant's car, smashes their windshield. That tenant or occupant is not part or is not an employee of the tribe, so they are considered a third party. So, and their car isn't our property, it's their property. So we had a duty to let our tenants know, move your vehicles to avoid this type of accident. And we failed in that matter. B, we probably should have checked the area before we started mowing, which we didn't do. And then ultimately, we had a loss sustained to a third party, and that's considered third party property damage. So liability definitely comes back to the responsibility of the tribe or the housing entity to make sure that we aren't negligent in any fashion, and we aren't at fault. But in the event that these accidents do occur and we were negligent and we were at fault, that's kind of where your general liability coverage will help provide protection on that. Professional liability is like your E&O, your errors and omissions. This pretty much protects financial loss from mistakes in a professional service. As an example, a tribe is planning or permitting, the office approves a project in error, and we're reviewing documentation and we missed a detail. And then we find out that the project that we were doing violates a tribal code or fails some sort of compliance, and now we've incurred a fee for not following code. So you have a financial implication there. It was an error, we missed it. So your professional liability would kind of kick in for some of those errors and omissions. Your employment practices liability. These are for employee-related claims. So hostile work environments, wrongful acts is kind of how we look at this liability coverage as well. Your cyber liability is, with today's day and age and technology, there is a lot of exposure to hackers, people trying to get our information and trying to withhold you from accessing that information. So what cyber liability does, it pretty much helps provide protection if in the event you get hacked or your information gets compromised. What this protection is meant to do is either provide protection to get your data back or help with that process in the event that you do get hacked, and you need to work with an individual to try to get your information from the hackers. This coverage would assist with that. And the size of the limit for cyber liability pretty much depends on the size of your operation. You can imagine if you have a casino, you'd probably need a little bit more higher limits to help cover that type of exposure, knowing that hackers get pretty smart. And if it's one thing, they might try to hack into your machines and your casino computers. So just something to be mindful as well. And then, of course, auto liability. So with an auto liability piece, if you have a tribal employee who is driving a company-owned vehicle for work purposes, and another vehicle, not our vehicle, is damaged in an accident, or the other driver is injured because of we were at fault, your auto liability coverage will come in play for those types of incidences. So these are just a few of the liability coverages that are out there. These are probably more of the common ones that we see, with general liability definitely being applied overall across the board, because that's pretty much a common type of liability coverage that you'll need for your enterprises or just in general as a protection from any third party types of damages. So liability can be very tricky because of course, you have to prove negligence, who's at fault. So it's not an easy yes or no answer at times. Definitely investigation that gets done when these types of incidences arise. And then just some other overview liability basics, who's covered. So the named insured, it will be the housing entity, the tribe, the organization, the employees that are under that entity and organization, officers and leadership who represent your tribal entity or your housing entity, volunteers, if you have volunteers, and then additional insured sometimes are also required to be listed. And you'll know if you have to have an additional insured listed because you should be getting some insurance requirements or guidelines of what needs to be placed on your policy. And just some limits of liability that we see as well. There's this thing we called per occurrence limit. There's another thing we call aggregate. And then the third bullet point you see is the completed products operations aggregate. So the per occurrence limit is pretty much the maximum amount a policy will pay in the event of an accident per occurrence. So as an example, using that example I used earlier where we had the water spill that we failed to clean up, somebody slipped and fell. Let's say that their medical expenses came out to 1.5 million. It's a pretty high medical expense. And let's say you had a policy limit of $1 million per occurrence. The maximum amount the policy would be able to pay out would be 1 million. Unfortunately, we wouldn't be able to cover that 1.5 because you have a 1 million per occurrence limited liability on your policy. So that's kind of how the per occurrence limit works. It's pretty much as each accident occurs. Now your aggregate sums up all the accidents in that policy term. So another example, let's say we had water spills 3 times out of the year, and we had slip and falls, each of those incidents tallied up to $1 million every accident. So you've got $1 million. You had a slip and fall today. We had a slip and fall the day before, and then a slip and fall 2 days ago. So $1 million each for the 3 accidents. That's a $3 million total loss. So if you add up 1 million per occurrence, your total aggregate would be 3 million. Well, if you have a $2 million aggregate on your policy, that will be the maximum amount that your policy will pay for the policy term. So per occurrence is per accident, and your aggregate limit sums up all accidents throughout the policy term, and that's the maximum amount that your policy would afford in one policy term. So a couple differences between the two. And then your products and ops aggregate, that is pretty much geared toward if you produce any products, and let's say you produce beef jerky or something, or sometimes our tribes out in the Washington states, they have fish hatcheries where very good fish, by the way, it's delicious. Back to the thing. So you got maybe fish products and it's being packaged, it's being shipped out, it's being sold. Maybe there was one fish that just didn't get produced correctly, or the refrigeration of where that product was stored wasn't the best, and that one piece of package got out and somebody got some sort of stomach illness from it, and they came back and said, hey, your fish product got me sick. So that's another type of liability as far as from a products and completed ops standpoint, that provides you protection as well. And then there's also limits for that. So depending on what your enterprises are involved in or your housing entities as a whole, these can all apply in some way or fashion. It's just another level of protection that protects you and your enterprises from third-party types of accidents. So just a general overview of liability. It's not, I mean, like I said, it's nothing that's kind of a yes or no type of answer when you ask. So sometimes it's a lot easier just to talk it out, ask questions, and of course, get a little bit more deeper into some of these details. And like I said, any questions or anything you would like to know more about on the liability piece, or if there's some other things that you would like to just talk about one-on-one, please, by all means, let us know, and we can definitely set up a separate time to go more in depth and detail about this type of coverage or any coverage that you may have questions on. So with that, we're going to move on to a property type of coverage that many folks may not be aware of, that they should either make sure they have or they already do on their policy and may not be accessing it. So loss of use and relocation coverage. This falls under your property coverage. And what this is, it is coverage for actual costs incurred as a result of a covered cause of loss. And this is up to the limit that is on the policy. So been talking a lot about sublimits, and this is definitely a coverage that you want to make sure that you're taking a look at the limit and making sure it's adequate enough, depending on what you have and what you manage. One thing I would like to point out to access this coverage it has to result from a covered cause of loss. As an example, fire. You have a fire in your home that can no longer be occupied. Now you have tenants displaced. What do? Water pipe burst, sudden occurrences. And I just want to prevent sudden occurrences. Your office can no longer be occupied because your ceiling caved in because you had a pipe burst that occurred. Maybe have froze, burst, and guess what? We've got a waterfall naturally that just occurred in our office. We can't be here any longer. So now you've got to relocate your operations. And another example, wind. You had a very high wind event that took out half of your maintenance warehouse. And guess what? The maintenance crew can no longer use this warehouse. They've got to go rent a warehouse, or you had a civil authority come in and say, you shouldn't be operating this building because if you can't tell, half of the wall is gone. So I would not recommend that you stay in this building. You're probably going to need to relocate. In fact, we're going to make you relocate. So somebody's come in and told you this property is deemed unsafe and you need to move and relocate your operations elsewhere. So these are just examples of covered causes of loss. You have wind, water, fire. Those are probably the most common that we see from a claim standpoint. And in order to access your loss of use and relocation coverage, you first have to trigger a covered claim. The claim has to be covered before you can access this type of coverage. And there's 3 types that you have access to in the event you have a covered claim. The first one is extra expense. And this is a temporary relocation of your office, warehouse, or storage building. So if you had an incident that occurred in your office and now you've got to relocate, maybe you've got to go rent a building and now you have incurred those rental expenses to relocate your housing operation. Those would be expenses that are outside of your normal day-to-day. Right now you are incurring additional expenses because of your relocation. Second type is forced evacuation. So you saw in that last photo where half of the wall was blown away. Or another example would be if you are in a wildfire prone state and the wildfire is getting closer and closer to your tribal community. Civil authority comes in and says, you guys got to get out. What are you doing here? You're crazy. There's a fire in the vicinity. We need everybody to evacuate. So pretty much you're being forced to evacuate, and then now you've got to relocate your operations elsewhere. So in the event a civil authority comes in, prohibits you to utilize your office for its intended use, expenses incurred outside of that, you could look at your policy to see what that can cover on your behalf. And the third type is geared towards tenant relocation, cost to temporarily relocate a housing occupant. Now, typically, if you have occupants that are residing or renting from you, they should carry a renter's policy to help with emergency living expenses. But we know sometimes that is not always feasible in the areas we are in. So part of your policy does provide tenant relocation. There is a set limit for this, and but for the most part, if you have a resident that's been displaced due to a covered cause of loss, you do have some allowance in your property to help with lodging relocation expenses for that tenant that occupies your home. So just some other coverages that are in place. Typically when we look at insurance policies, we look at property, liability, business income, and sometimes we forget to look at the finer details of, man, what do I do if my tenants can no longer live here? What do I do if I have to relocate my operations elsewhere? Those types of coverages are provided as an additional enhancement to your policy. So definitely take a look to make sure these are included. As part of AMERIND's policy, these limits are included on your policy. So if you were looking at other coverages, make sure that this is included at zero premium, because on our side of things, we covered a coverage enhancement endorsement for you. So just another added support to make sure that we're supporting our tribal communities in the event something happens, in addition to just replacing your property. So loss of use and relocation, I think key thing is making sure it's a covered cause of loss in order to access this. And then this is definitely utilized if you are not able to conduct your operations in your housing or tribal enterprises. And then, of course, provide some protection for our tenants as they need to be relocated. So as we're looking at coverages and kind of helpful hints of what you should look out for in your coverage, what's included? How do I know what is included in my policy? One thing I'd recommend is review your deck pages. Your deck pages are like a short story of what you have, your deductibles, your limits. When does my policy begin and when does it end? So definitely checking your deck pages, looking for those limits. Are there sub-limits that apply? The next thing would be confirm sub-limits and limits, which you should be able to find in your deck pages. I'd also ask as well, either your carrier or your broker, are there any limits within the coverage form that I should be aware of that aren't on my deck page? So that just helps keep you informed as to what you have available. Identify your coverages. Do I have property? I'll more than likely need some general liability. Am I collecting rents, or do I have employees on my staff that handle financial transactions? So evaluating what your operations are and making sure that you have coverage in place in the event there was a theft or property damage that occurred. Reviewing your exclusions. This goes back to the previous slide about tell me what's covered and what's not covered. One thing I would tell you about reviewing exclusions is if it is listed as an exclusion, ask, because it may be excluded in one section, but there could be a possibility that it's given back at a sub-limited level in another area of your policy. Insurance is very not tricky, but there's areas where it gives it to you and it takes it away. So if you definitely want to know what I am not covered for, review the exclusions in your policy, because on our coverage forms, if there's not an exclusion listed in there or property not covered, you more than likely might have coverage for a loss that you have. So definitely take a look at your exclusions. That'll tell you for sure what's not covered on your policy, and then compare your policy to your risks. We talked about risks earlier. What are you exposed to? What could possibly happen that could have a financial impact on your operations? And lastly, confirm with your broker. For those of you that have brokers on your accounts, ask them, hey, I want to see my deck pages. Tell me what limits I have, what coverages do I have in place. If you don't have a broker and you're currently with AMERIND, ask us, set up some time. We can definitely go one-on-one, page by page. That might take a couple of days if we went page by page, but we can do an overview, simplified in an hour or less. So ask questions and then ask yourself, are all of my critical businesses and enterprises covered? Are my locations covered? Do I have everything that I own and manage? Is it listed on my policy? So I know sometimes we forget to look at those details, but it's very important that you're just taking a double, triple glance at your policy to make sure you have everything included. The last thing that we want to say is, I'm so sorry, but you do not have that property on your schedule, on your policy. So double, triple checking it always helps. And as I mentioned, request a coverage summary. whether it's with your broker, your carrier, AMERIND. Just ask, what type of coverages do I have, limits, deductibles, and what are my exclusions? Those will probably be the key things that you definitely want to make sure that you're getting your answers to. And that just also helps from your knowledge as well to say, hey, I can sleep tonight because I know I have everything covered on my policy. And if we were to have a wildfire or tornado blow through this area, it's like sleep coverage, right? You can rest assured that you can sleep well at night knowing that I am well protected. So questions to ask just to make sure what you have covered, what's not covered. And then as we still continue to provide some insight, what are some common pitfalls? And assuming that you're covered without verifying. We talked a lot about verifying your information, making sure your operations are included under your coverage. Don't assume without validating and making sure you have everything listed. Under insuring your property with the rise of inflation, cost of materials, construction, double, triple check those values. I can't emphasize that enough. You would know better in your areas what your property values are at and what the costs are coming in your various areas. So just making sure that you're adequately covered and your values are current, making sure you carry adequate limits. And what we mean by a common pitfall to avoid is making sure your limits are lower than you know. So as an example, well, I know this home is $250,000 to rebuild, but you know what? I really don't feel like paying the premium, so I'm just going to schedule it at $150,000. Saves me maybe $40 on my premium, but I'm willing to take the chance. I'm willing to bite the bullet. Loss happens. Guess what? We can only pay you $150,000, and that was because we chose to improperly value our property. So try avoiding having inadequate limits. I mean, the premiums may seem like, hey, I'm doing a cost savings, but in the bigger scheme of things, if you do the math, it's probably best that you just insure to value and not try to lowball it, bite the bullet, and hope and pray that nothing happens. And another common pitfall is not matching your coverage to exposures. It's like, oh, I got a bunch of gas stations, but I didn't account for all of that business revenue in my business income worksheet. So that can take an effect, because if you know you're generating X amount of dollars, but you only reported, a lower number, and something happens, that's the limit that you would have on your policy. And the missing entities or locations. For those that have large housing stock or just a large tribal enterprises, just making sure all of your commercial buildings, housing type of stock is on your policy. And then that way, double, triple checking, especially your large locations, right? Making sure that they are definitely on there and have adequate value in the event something happens. And the lack of business interruption coverage. If you have some sort of type of revenue, or you're collecting rents, or anything that has a financial impact, just make sure you do have business interruption coverage. Because one thing that we do see is, especially tribal enterprises, sometimes they don't have the business interruption coverage. Something happens and we can't put back that revenue that they may have lost for the certain amount of time that they had to be closed. So, just making sure you avoid that. And then something to avoid is poor claims understanding. In the previous slide, one of the questions was ask how their claims process is, ask how long it takes, ask can you talk to an actual person. So these are definitely some things we would recommend avoiding as you are looking at your coverage. And then just some key takeaways: understanding your coverage, making sure you're aligning what your operations are, protecting, of course, continuing to protect property, people, and revenue. This is pretty much the goal of our side of things as far as providing insurance is definitely important to us from a people standpoint, and what tribes are currently operating with. Review and update regularly, and then ask questions. Trust me, there is never a dumb question when it comes to insurance. We just try to provide that guide. We try to be the resourceful individuals that if you ask questions, we want to be able to provide those answers and help you build the confidence that you can in understanding, oh, okay, I understand what this means now. I asked the questions and then now I know, because if we don't ask, then we don't know. So don't be afraid to ask. Trust me, there is never a dumb question when it comes to insurance. And in fact, sometimes some of the questions we get asked is like, wow, that's a good question. I should probably dig into that. And guess what? I'm going to get you an answer. So don't be afraid to ask. Don't be shy. Like I mentioned, if you want to schedule some one-on-ones with your underwriting team, feel free to reach out. We can definitely help be that resource for you and give you the confidence to know that and understand what you have in place as far as from a protection measure. So with that, we will open it up for questions. And in my language, elakwa, that means thank you. And I hope you found this information valuable and resourceful and something that you can take away. And if not, you can throw the popcorn at the screens all day, and I take no offense.
Thank you so much, Shannon. We really appreciate that. And thanks everyone for going with us on this new technology. We really appreciate it. Again, send your questions to us, and I will send this presentation out in an email after the fact. Have a wonderful day, everyone.
Thank you, Elakwa.